What's up, everybody? So today we have a little bit shorter of a video. I wanted to go over how I keep my client retention super high. One of the ways that I do this is through doing a proper financial inventory when I'm talking to people. So I'm not going to show them anything that's actually going to push their budget too much, but also it allows me to build value and credibility by showing that I do know what I'm doing and showing them options that are going to work for them and their family. So with this, there's a couple ways we can do this. So the first one I have built out, if you do run a go high level, I'll go through this automation on how to do it. And then I'll have a free one if you want to start running this and you don't have go high level. So for this, what we have is we have a working financial inventory on here. So when I talk to clients, I typically do mortgage protection. So on the general info, it'll have a mortgage amount on there. And then what I can do is I'll have, if it's a two-person household, we'll have income one, income two, and then we'll have all of their monthly expenses, all the average ones. So when we're talking, we just want to make sure that any bill that's actually that could be large to the client, that we account for that. So then when I go to do quote, I'm going to calculate out their discretionary income, which is going to be their income minus their expenses. And then 30% of the discretionary income is going to be the top one that I'm going to quote. So if they have 1,000 left over every month, the most I would ever show them would be $300 a month, but typically they will probably go for the lower one. But that's how I'm going to gauge that out. If you're doing a critical period, this will also calculate what it'll take in order to structure a critical period. If you are doing that sort of thing, especially if you are doing mortgage protection. But if you're just doing final expense, this really helps out in just making sure that your client is able to afford the coverage, because in this type of business, obviously it matters what you keep on the books, not how much you write. So making sure that you do go through a proper financial inventory with your client every time is going to be how that works. So kind of how this automation works. So we do have, it's a bunch of monetary values. So for the automation itself, it's very, very simple. So we have our in appointment. So this is our financial inventory. So what we're doing, we're just dictating all of the contact triggers as going to be numbers. So the first one at the very end, other loans slash credit card payments. Obviously, that's the last one that I'm going to do. So that's the very end of the financial inventory. So when that gets inputted, then it's going to calculate out, it's going to total all their expenses that we listed. It's then going to add their two incomes together. Then we're going to get, this is going to give our discretionary income. Then we're going to get 30% of that. And then finally, we're going to calculate out our critical period. If it is needed for the client, some clients, you're just looking at a full mortgage payoff. It's just a simple numbers game. So it's just making sure that it works with their budget. But if you are in a situation where you are doing a critical period, that workflow will automatically calculate all of that. So you don't have to worry about doing any of the calculations yourself. Now, obviously, Go High Level insurance systems, that stuff is a paid for software. So I did want to have a free resource for you guys in case if you're running this, if you're starting off, you're doing final expense, stuff like that. I'll leave a link to this in the description. So this is just a free way to do a financial inventory. So let me get this. So on this, obviously, if you're running final expense, you're not going to have, you might have a mortgage amount if you are doing that type of thing. But for the most part, you're just going to leave that out there. Then all you're going to do, if it's a two-income household, you're going to fill that out. So if you have $4,000 a month, Betty makes $2,000 a month, it's going to automatically calculate that out. Then if we're going to go mortgage payments going to be, say, $900 a month. That's going to automatically populate that. So then let's just say 100, 100, 100, 100, 100. So then it's going to give you fixed expenses already there. And so then you know what you can technically quote. Obviously, this one, they have no expenses at all, but it gives you an idea of what you can quote and what they can comfortably afford. Because if the bill is comfortable with them, it's going to stay on the books. And I'd rather have it be more comfortable for the client and we never have to worry about a chargeback then push the client's budget too much, and then the value gets lost on the sale. So that's just an important thing to do. So for that, that's how that's structured. Then it also calculates your 6 months, 9 months, 12, and 24 months of those mortgage payments. So that's pretty much everything when it comes to doing the financial inventory that I find helpful. It helps keep your clients on the books a lot better than just saying, how much money do you make, right? If you total it all out, it makes it much, much easier to pitch and also make sure that it's affordable. If they say this is unaffordable, you can be like, listen, this is only 10% of your leftover money at the end of the month. It's a much easier sale in order to do that. Now, if you guys do want to start working with insurance systems, so that's the CRM I have built out, I'll leave a link in the description if you do want to check that out, or if you would just want to join our free school server, I'm more than happy to help you. And then also I'll leave this Google folder, well, this Google template for you. So if you just want to download that and just have it available, I typically just copy and paste this and just run it over and over again. And so yeah, that's it. Thanks for tuning in today, guys, and we'll have a little bit higher production video for next week. All right, we'll see you.